So hello guys, I'm gonna try and explain how I find out um, my areas of support and demand. Let's make believe that we are now trading after this gap down on September 9, okay? And the price starts to grind higher. This is an S&P 15-minute chart. The price tends to grind higher, okay? What I noticed that price tends to grind higher, it squeeze up, and this usually overextended move trying usually tries to find some liquidity that has been left behind to continue eventually the grinding on the higher ends. So what I discovered that there is this little shooting star on the 15-minute chart, and I box it this way, okay, and my fault, and I try to discover this area, okay. In this area we have this candle squeezing, then struggling, and then squeezing again. So this is squeeze, trading range, and squeeze again. So I take the base of the first little squeeze, the upper close of this shooting star, and the basis of the next squeeze, and the price tends to go back into the area to find new liquidity to grind higher. Obviously, as you can see on your left here, we have another strange candle that has provided reverse on the short-term trend, and we can use this candle to eventually figure out another area. And as you can see, the price, this level, it's an interesting price for the price section. So I box it this way, and then down on the basis of the candle. And as you can see, this area in the future to come has been used as supply, straight into the higher range of the supply, then back again into the other demand that I figure out and that worked for the first test like a fast scalp into the next area that we have discovered, pushed back into the demand. And as I already explained many times, the second test is usually the stronger, and in fact after the second test into the demand, this is the first test, this is the second test into demand, the price squeezed up, breaching over this area that has provided supply on the first test, but because of this second test on the demand below, the price squeezed above the supply, back tested it to the tick, and started to grind higher again. And you can do this trick really almost on each minor or major time frame. For example, you have to ask yourself why the price stopped its run here. You discover the answer in this little squeeze, trading range, and drop action. So you take this one, you take this one, and as you can see, the price tends to find resistance into this area once again, back into the previous area that we have discovered, thanks to this imbalance, okay? So watching the price action hours or also days in the past can provide area for the future price action to come. As you can see, the price tends to move from this area, backtesting them, and what I try to explain several times in my Twitter feed, you have to gain some confirmations. For example, this is a perfect example of confirmations, because we have the price dropping into an area of demand that we have discovered here. It closed this candle inside it. The next open, it's inside the demand, and this is a great risk-reward trade to go long again. And because you know this is the second test, you can expect good move up from this demand. And in fact, the first supply above breached, backtested, then straight again into the overhead supply that we have just discovered, okay, here. In this case, the price backtested once again the previous supply, now turned demand, and because of the second test on this area that is now turned demand, the price ran into the supply, started to bid into the supply, and this is the third test. Okay, the third test, I already told you, it's not the safer one. Okay, no, it's not the safest one. You already have one test, two tests, and because this demand has done its job, you can't expect that this supply on the third test works again as a supply, and in fact we have the price tending to find acceptance inside the supply. This is not a good sign if you are shorting this area, because probably at its first its third test, okay, the third time that the price goes into this area and it tends to find acceptance, you see this candle opening inside it. You have, it's kinda safe to think that the area is turning its function from supply to demand again, and the price started to grind higher. And then up again into supply level, and so on. So this is how I identify my areas. Obviously, this thing that I just show you, it's a very quick analysis that I do. Obviously, when I do my chart, I'm kind of more surgical. But I just wanted to show you the thinking behind this kind of analysis. And many asking which time frame do I look for when I do this kind of analysis, and I always say that I check all the time frames, because on a daily basis we can see several examples taking a randomical area of the last rally. Okay, this is March of this year. We have this particular day, okay, in which the price came from a huge rally. Okay, if you remember, this is the huge rally that happened around March 24. Okay, obviously you can't expect a straight prosecution of the price after such a rally, and in fact, on the third day after the bottom on March, we have this particular day that, as you can see, it's a very thin candle with huge shadow above and below. So what I did also back then was to do this. I take the open of this candle, okay, here, and I took the higher range of the shadow. And as you can see, in the next coming days, we had open of the next day inside this area, and the price started to grind higher. Obviously, now we have to go into a smaller time frame to see why the price tended to stop here, and the answer probably is on this candle here. I have to look into smaller time frame and go checking. Now we do an experiment, and I put randomically area here and here, okay, and I will go into a 4-hour chart to see if I find some area that has potentially built this supply that has been played during the first days of rally in March? And the answer, as you can see, it's here in the past. Exactly, and it's kind of surgical here. We have two 4-hour candle that played that kind of movement or kind of trading range that I explained you before on a 15-minute chart of a few days ago. So as you can see, the price tends always to move into this area of liquidity that you can discover because visually you see the price struggling inside it. Another great example, it's here. Um, as you can see, these kind of levels always tends to repeat themselves from the past to the future. So you have to look back, discover this supplies and demands area, then look for the future price action into this area. For example, I will now take this box here and here. Okay, you see this is a box that happened on the price section on March 5. Okay, and if we go into the future, I'm almost sure that some future price action, and you see here, this has been a great supply about almost 2 months later. Okay, as you can see, this is April 30. Okay, I discovered this area that has been a supply almost 2 months before. As you can see, now we go back. I zoom out. Okay, I discovered this area here on the dump during the coronavirus crisis. Okay, and many weeks later, this same area has produced one reaction, second reaction back into this demand area that you can see here and here, and you can discover just analyzing this small trading range on the 4-hour chart. So you have the price rallying from the bottom, taking supply back into demand, supply back into demand, back into an upper supply, and so on, because it finds acceptance inside them. As you can see, this supply here as a first test back into demand, second test back into demand. On the third test, the supply breached into the next supply, back into demand, and so on and so on. And as you can see, discovering this area from the past, also from months in the past, can be useful for the future. As you can see here, first test, back into demand, second test, back into demand, third test, the price started to find acceptance inside the area, and in fact it squeezed up into another supply, into another backtest on demand, into an higher supply again, and so on. So discover this area is kind of easy, in my opinion. Obviously, what I did in this video is kind of fast because I have to show you in a quick way, and obviously in my educational service I will be more specific in the way I discovered these areas, but I just did an overview of my process. Obviously, what I try, also as you can see this, also as you can see this old supply now turned demand after this huge dump on June. Okay, you remember this dump on June, the level in which the price found a support was an old area of resistance that we have discovered 6 months, 5 months before. Okay. Anyway, the very important thing that I want to try to explain is that discovering this area is kind of easy, in my opinion. Once you have done some practice and your eyes gains the skill to find this area, it's easy to discover them. The tricky thing is to be able to understand how to play them because of the first or second test, because of the third test, and so on. But also, this is not a rule that always works, because sometimes certain areas, because of their weakness, um, are breached on the second test. For example, you have to understand and gain the skill to understand what I try to explain. So the confirmations using the time frames and the opening candle above, inside them, the way the price reacts into a demand or into supply. If the second test is not stronger than the first, it's very probable that that area is weak, and so on. There's a lot of tricks that I use to gain an edge with my method on the price section. And someone asked me, surely I will write them on PDFs in my educational. But I hope that somehow this quick video help someone in understanding my process and the way I discovered this area and the power that this area can have also hours, days, weeks, or even months in the future. So I quit for now, and as you can see that I told you that uh, at the open today, if the price was above 3,337, the direction was above, and we are now up almost 10 points since I sent that warning of someone caught it. Anyway, this is all for now, and as you can see, you can apply my method on a 1 minute, on a 5 minute, 15 minutes, into a month possibly, um, weeks, anything. So hope this helps somehow, and well, as you can see, we have discovered an imbalance on the March dump, but if we go back in the past, that same area was already being interested by the market. Obviously, the level changed a little, but and that's why I always tell that the price action is dynamic. But if you go into the past, it's incredible how that this same area that has been played in March 2020 was already in playing somehow in the past years. Uh, anyway, we'll go better into it. Look at this, for example. It's incredible. Anyway, hope that somehow I help you with this video, and let's see if this week is gonna be great like the last ones. Okay? Thank you everybody, and always for your support and company. Talk soon.